Hey, this is Matt from InvestiQuant. Today is Thursday, November 12th, 2020. And this morning we saw the markets gap down in three of the four instruments. The NASDAQ was the one that was a little bit different and ended up gapping up this morning. But the other three instruments gapped down and we saw a pretty choppy open. We had light range early on and the market was seeing two-way action, not really doing much on either side. But this afternoon, we have started to break down and we are making new lows, just made new lows on the session. So what I wanted to do this afternoon is take a look at this pattern like we're seeing here in the S&P, where you gap down in range, but then in the afternoon, you're trading in the bottom half of the range and you're trading below the prior day's low. So we took out yesterday's low and we are trading down in the bottom portion of the range. So let's go ahead and set that up and discover. We'll look at all four instruments. And the setup is going to be a time-based entry, and I'm going to go ahead and use 3 p.m. Eastern Time for the entry. It'll be set up as a long that'll get out of the market at the close, which is 4:15 p.m. Eastern Time. The opening filter I'm going to use is gap down within the prior day range. And I think that's important that we put prior day range because I'm going to add in the next section, the post-open filter section, that it is trading below the prior day low at 3 p.m. Of course, I don't know if we will be trading below the low at 3 p.m. because that is not here yet, but that's what the test is going to be using for the study that we're running. So I'm going to come in here, and to add that it is trading below the prior day low and in the bottom half of the range, I'm going to first come into the bottom, add the bottom half of the range. So in this intraday close versus intraday range, I can click close in the bottom half of the intraday range. That'll mean at 3 p.m. Eastern Time, it is trading in the bottom half of the intraday range. And then to say it is trading below the prior session low, I need to go down to the intraday low versus daily levels and hit equals next to below prior low. That'll set that up. You know what? I didn't mention this when I was recapping the session earlier, but we did not fill the gap either. So I'm going to go ahead and add that as well. So I'm going to hit equals next to gap not filled. So this will make the pattern a gap down in the prior day range that does not fill the gap. And then at 3 p.m., it is trading in the bottom half of the range and below the prior session low. So let me add a similar market environment to this pattern. I'm going to say we are above a 10 and above a 200-day simple moving average, and then click view results. Before we hop into the results, just a reminder one last time that we are having a webinar today after the close talking about auto trading. So if you are at all interested in auto trading, learning more about what it is, what type of results you can get auto trading, and how you can start auto trading, you should join us this afternoon after the close at 4:30 p.m. Eastern Time. There is a link below this video that you can click on to add your name and email to the list of those who will be invited, and it'll start at 4:30 p.m. Eastern Time. All right, let's get back to this study. All right, here are the results of going long at 3 p.m. Eastern Time, exiting at the close, which is 4:15 p.m. Eastern Time, when you gap down within the prior session range, and then at 3 p.m. Eastern Time, the gap has not filled. You're trading in the bottom half of the range, and you're trading below the prior session low. So that's some weak price action that is developed. This is taking place above a 10-day and above a 200-day simple moving average. And historically, we've got 111 samples in the S&P, so pretty regularly occurring pattern. The NASDAQ 113, the Dow 115, and the Russell 108. And if we take a look at the win rates on here, just a slight lean to the long side on all four of these. Not really strong numbers, but S&P coming in 55%, the NASDAQ a little bit stronger at 58%. The Dow 57% and the Russell 56%. So a little bit of a lean on the long side. If we look at the average win, average loss, looks like fairly similar in size here in the S&P. The average win is a little bit bigger than the average loss in the NASDAQ. The average loss larger than the average win in the Dow. And the average win, average loss, pretty similar in the Russell. So we're not seeing a giant skew where all four of them are favoring one side or the other as far as average win or average loss goes, but all four of them do have a slight lean to the long side historically. So hopefully you found that helpful. Good luck the rest of the day, and hopefully we'll see you after the close.